So, okay, hello everybody out there. Very welcome to our weekly Monday US morning show in Traders Yard with xTasyTraders. So yeah, today we have some nice stock picks again: Tesla, SiteOne, Barker, Gazprom, Broadcom, Arista, and so on. Yeah, and we are very happy to see you on board again. Good morning in US, good afternoon here in Europe, and good evening in Japan. Here on board with us is Rudi, asset manager in Zurich and Tokyo. Mike Seidel, he is portfolio manager in Frankfurt. Then Martin Gersch, he is also portfolio manager Zurich, Frankfurt, and me, Gilbert Kreuzthaler. I'm the CEO of Traders Yard, xTasyTraders, a China trader. Yeah, so let's come to today's stock picks and our investment ideas we have. But first, we should go into the risk disclaimer. So just to be aware that trading in futures, stocks, and options involves a significant risk of loss. Traders can lose more than their initial investment. All trading strategies and ideas we present are used at your own risk. We are not responsible for any losses resulting from following any of those strategies. And of course, there might be a conflict of interest. Since we are traders, we may already be invested or soon to be invested in the symbols we analyze today. So, okay, this is just the initial information. Martin is going to present us some, let's say, analysis of the S&P 500. So I just will switch over to him. And yes, after the analysis of the S&P, he's just switching back to me, and then I'm going to get forward with my stock picks today. Okay, Martin, I'm just switching over to you. Make a presenter. Yes.
Yeah, great. Here it is. Okay, so yeah, welcome to the show, also from my side. So let's take a look at the markets and see what we could make out of it. The index I chose for today is the S&P 500, and the reason is if you have been here at this place for several weeks now and always listening to our analyses, you might have realized that I, even several weeks ago, I put out the price target of 4,400 points in the S&P 500, and now we reached this price target. And the question now is what to do. What to do with open positions? Close them, or pull your stops tighter, or maybe reverse it even to a short trade. So I'm going to show you how I see the market at the moment, how I see the S&P 500 and what's important, where the important levels, and I also give you an idea of how to build up new positions if you're not already invested in the S&P 500. Okay, so I'm going to switch off my cam so you have a bigger screen. And I guess we just start with the monthly chart to get a broad overview over the last several months of market movement. And you see this is like what I like to call the Corona crash, the COVID-19 crash. It really was a crash, actually. We had a movement from the top to bottom. Let's see, with the ruler, we have a movement from top to bottom of more than minus 35% in 2 months. So this was really a big down move. But nevertheless, the S&P managed to conquer the 10-month moving average again, already 1 month later. And from this time on, it was quite clever to choose the long side again in the market. This was the last possible time to go long the S&P for a long-term trade. Of course, if you take a look at the smaller time frames, you could have been on the long side even earlier, but the big time frame, the last moment with the last initial signal was the breakout above 2,000 980 points up here. So, and from this time on, the market moved really strong to the upside and now reached the price target of 4,400 points. In the weekly chart, we can see prices are way above the 10-week moving average. Like we see it all the way up here. And I really like this scenario. I really like it. If when the RSI indicator is very, very strong on the weekly chart, and it actually at the moment is very strong, the actual reading of the RSI is 69.65, so nearly 70%. As you remember, in my trading, 70% is like the power zone. I really love it when single stocks are above 70 RSI on the weekly chart. Now we have this situation for several weeks now in the S&P 500. So long story short, the market is still strong. The uptrend is still valid. We have one little problem, that the rally we are seeing at the moment is not really a broad market rally. We have a lot of stocks that are trading below their 50-day moving average. At the moment, if you take a look at the NYSE, it's around 30-35% of the stocks are above their 50-day moving average. So around 65 to 70% of the whole stock market is trading below 50-day moving average at the moment. And the 50-day moving average is nearly the same as the 10-week moving average. And so we see S&P 500 way above the 10-week moving average, but a lot of single stocks are trading below this very, very important average. And that's what I do not really like at the actual situation, that we do not have a broad-based market rally. But nevertheless, the big market cap stocks are still very strong, most of them are still in a valid uptrend. And what we see at the moment here in the S&P 500 is something like a bull flag. This is a bull flag. We do have the beginning of the move down here at the 50-day moving average, very strong move to the upside, and then the last week market's getting a little bit weaker, but not selling off. And that's what's important at the moment. The markets are not selling off. We see a strong start into the week. We see a strong start into the month of August. And so I'm quite optimistic that the S&P manages to break above this level, maybe even during this week, and tries to continue to the upside. So if you are long at the moment, you have a lot of possibilities to manage your risk. If you take a look at the long-term chart here on the daily, from the beginning of this year, you can see that we have a lot of situations where the price tested the 50-day and just moved back up again afterwards. So if you are trailing your stop somewhere, let me see, somewhere at these levels, down here, 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 so just below the last candle that was testing the 50-day moving average, you have quite a good chance to keep your position, even if there will be one more test of the 50-day moving average before markets moving higher again. So as long as this uptrend is valid, you can just use these very certain last lows on the daily chart to trail long-term positions. For short-term positions, I guess you realized profits already around 4,400, but now there might be a new chance to enter the market above 4,420 somewhere here. So this is set up for the daily chart. We could move into the intraday charts as well and take a look at these situations as well, but I guess that's too much of short-term trading. We are more concentrated on the swing plays here, and so that's what I think about the S&P 500 at the moment. Still strong, and I think we could see more upside, maybe to the level of 4,500, 4,550. What's very easy normally is just to take the last retracement and take this level, this range, and just put it on the breakout level, and we go to a target of 4,540-ish, somewhere up here. So this would be the next logical target for the S&P if it could manage to keep this uptrend valid. Okay, Gilbert, so I don't know who's starting with the single stocks. Maybe you do start, I'm not sure. So
yes, I will. I'm just taking over to me.
Okay, perfect.
Okay, good. So making me as a presenter, give me a second. So I think you should see my xTasyTraders. Yes, it's here. So yeah, many thanks, Martin, for taking over the starting analysis of the S&P 500. Yeah. What do I have in my pocket today? I'm starting here with Barker Hannifin Corp. It's headquartered in Cleveland, Ohio. It's a global diversified manufacturer of motion and control technologies and provides precision engineered solutions for the mobile, industrial, and aerospace markets. Yeah, so just looking at the fundamentals, at the revenues and earnings, the annual revenues are quite stable since 2017. We're rising basically 17, 18, 19, 2020, of course, COVID, but it did not have a big impact on the revenues. Also, the revenues, the quarterly revenues are steadily rising here, as we see. And yes, the earnings are also little rising. 2020, of course, there is a backfall, a little bit COVID concerned, but as we see here also the quarterly earnings are steadily rising now. So it seems they are coming back and making good profits. The earnings, if you see earnings per share, they are extremely gaining. So we had in Q2 2020 a consensus of lower than 1.60, 1.50. They have beaten it quite much all the time, so they were always quite above the consensus. And also the recommendations, it's still quite bullish, the recommendations. There is 6 strong buys, 7 buys, 7 holds, no underperform and no sell recommendation. So this is quite good recommendation trend. So let's get into the charts itself, why it came into my focus. As usual, let's start at the monthly chart. Yes, COVID, we know. Then we had here a strong up move, as most of the stocks, especially in the technical sector, in the yes. So then a correction back to the SMA 8 with a good reversal bar at the SMA 8. Then it went up, made a small correction back, and now it seems to be bullish on the monthly chart again. So the overall scenario is bullish. We are interested how the month will start, of course. So the last 2 months were quite with reversal bars, quite in a bullish scenario. So let's go into the weekly. And this was the reason why it came into my focus, because we see here again this up move. So back to the 8, back to the 20, up, back to the 20, up again. And here, basically this scenario is not the best from my point of view, because it does not get any support of any of the location points lines, which I'm always looking for, and this happens quite often if this scenario is like this, that it just goes up again and then turns here. But what we have seen here is this stairway pattern, so it came back, went up here to the SMA 20, returned. Here we see this strong reversal pattern now, the stairway pattern, and from here on I've got the signal, and since the correction is basically not that sharp, it seems it has good potential to go into the long direction further. So okay, this is from the weekly. Let's have a look at the daily chart. So okay, need to get out of this here, this stuff. Not confuse you. So okay, and gone here. Okay, so yeah, this is what we already can take. So we see here also this this line, this correction here. We see the crisscross around the SMA 20 quite a long time, up and down. And so here we are now, and now the market went up. We see this here with the stairway pattern. So market went up. Let's zoom it a little bit to what to see here. At this point, we see already a slight correction, but it did not really work out. Came back. We see here not a clean, but somehow a so-called trampoline pattern. This one here went up here, a short correction. It continued. And here we have a correction back to the SMA 20, and immediately afterwards on the daily chart here, it corrected on the SMA 20, and it seems it's going up here. It has the potential to go in the long direction. We should not forget that we are in front of some resistance areas. Of course, they might be interesting here and here. So from this point of view, there is, of course, there is a potential to get into this area at around 326. But based, if it really continues, too many lines here, switch it off. Of course, from here, basically, if we measure this up, take this line. What's going on here? So this one, measure this one, and take it from this low or from this low. We might get into a area at around 360. So this is a scenario which could work out. So basically, it also depends, of course, on the overall market. But yes, this could be 360 could be somehow a target for if this long scenario really works out. Okay, so this is the pH. Let's go to the next one. This is Broadcom, AVGO. So Broadcom is headquartered in San Jose, California. It's a premier designer, developer, and global supplier of broad range of semiconductors, and focuses on complex digital and mixed signal complementary metal oxide semiconductors. Yeah. So how does it look like on the annual revenues? We see here it's steadily rising from 2017 on, even 2020. 2020 was also still rising. So of course it's in the technical sector, and this technical stocks, they all are just gaining. They did not have any impact on the COVID. Most of them was not impacted by COVID. We see here 2018 a very huge earnings. On the other hand, it's steadily rising. The quarterly revenues are also gaining mainly, and also the quarterly earnings are also quite stable and in the upwards trend. The earnings, the consensus has also been beaten all the time, so not too much, but quite a bit. And also the earnings consensus is rising from 530 in 2020, Q3 2020, up to about 690 now for Q3 21. And the recommendations are also very good. So we see currently 10 strong buys, 17 buys, only one hold as it seems, and no seller recommendation or underperforms. What do we see here? Again, monthly chart. We see that taking this one because the COVID crash, yes, for all of them, up move again. So correction back to the SMA 8, and here we see also on the monthly chart quite a good reversal pattern at the SMA monthly SMA 8. It's going up, and now we see also here this is quite a bullish candle here at the SMA 8. Of course, we are here and need to be careful because we're here in a resistance zone. So this might be a little bit become choppy here. So this is the view from the monthly chart. Let's get into the weekly chart. We see here again strong up move, SMA 8 back to the SMA 20, here back to the SMA 20, and we are here in a sideways phase where we also see this resistance zone here. So as it seems, we got here rejected 2-3 weeks ago. There was a reaction also on this with a short stairway, but it immediately got basically denied here at the SMA 20, and it seems it's going to get further into the long direction. Of course, this is here a zone where the markets are reacting basically on such pattern. You should be careful if you see a stairway pattern because they are quite strong. But in this case, for me, it seems that the long direction will win. On the daily chart, which is always then the important one, we see the sideways phase crisscross around the SMA 20, up and down. So here it's getting tighter and tighter, up here, back here to the outer Bollinger Bands, here up move, and at this moment we see this candle, which is going down the market, but immediately getting back above the SMA 20, and this is somehow our double bar retracement. If you take this one also, we have a nice triple bar retracement here, and it seems it's going to get further in the long direction. So in this case also, to get into this position, the best is currently this where we have a little bit space between entry and stop is if you get into the position above the Friday's candle, the stop should be below this candle here. And where is the target? This is also can be measured out of the last move here. I would say this one is a good possibility to put it from here to here. So this could be basically, we could here measurable target could be about 523, 520, something around this. What you also could do is here, maybe it's even the better to wait a little bit, because we will see another correction. So if the market goes up here, this direction, somehow maybe we are correcting here at this area again, the market gets back and makes somewhere a retracement at around this price level here, then there would be maybe a better possibility to get in, even with a closer entry scenario where the entry and the initial stop is not that far away, so that you can basically have a, let's put it here, if you get closer into this trade, then of course you can increase the entry size, the entry order size, and this could be then a much better profit loss ratio. So yes, so this could maybe be a better way to get in. So if you would like to get in immediately, the stop would be here. If you would like to wait and find somehow a scenario confirmation of this scenario a little bit later, maybe you might have might get in with a better with a higher entry order size. Okay, so that's it from my side. Who's the next one?
I guess it should be me, and I'm ready to go.
Yeah.
If
okay.
You're prepared for that. So you can hand over the screen to me if you like. So,
yes,
and
I'm already doing it.
Thanks a lot. I will present you two stocks which I think are really, really nice and a good situation to trade them. And the good thing is they have a the same approach, but into different directions. This is something I really like. So let's start with something. You can see it here already. To give you the best view on the chart, I will switch off my cam so that you can follow the chart easily. So you can see here the first one today is Lockheed Martin. It's I think I don't have to explain what the company is doing. Of course, it's in the aerospace and the defense products and services. So something, I think more than 80% or roughly 80% of all the money income is coming from the government. So I don't think I have to introduce this company very much. But what I do normally very much is I check the chart. What is the situation here? And just to give you an overview what the market did so far, it was a really, really strong bull market we've seen here. And so I think skyrocketing is the wrong word, because it's even more than this one. The market is shooting to the stars. And the question is, when will the next run to the sky is starting? And I think we have a good opportunity now that this will come in next, because what we see here on the daily chart, this is the daily chart, you can see also that the last strong move we had here was something like a 1, 2, 3, 4, 5 wave pattern. This is very typical for a strong market move. You will see this several times. You can easily see this in different time frames. For example, I will show you later on that this is even occurring on a lower time frame here as well. But now I want to stick with the daily chart, and to give you the best view, I will zoom it in a little bit. So after the first strong movement to the upside here, we had something to the downside. And now if you compare both sides, this is a down move here, and compare this to the strong movement to the upside, you would easily say, okay, this is a strong one. You can also have a clue when you see where do we have setbacks. We have here some breather in the market. We had a setback here, but you can easily see they are not interfering. You can see there's a gap between them. So the market is strongly pushing upwards, sometimes coming back, of course, but not really far. And so it's giving us a good indication that this is the better way to trade currently. Vice versa, you can see we had here, from this highest point here, we had a setback here, we had a setback here, we had a setback here, now currently here. So you can see, okay, the down movement has a lot of let's say situations where the market is overlapping, and this is really typical for a correction or a corrective move. So this is the counter trend direction. So if this is a counter trend direction and this is the main trend direction, which is absolutely in sync with the overall view in a weekly chart or monthly or whatever you prefer, then of course we are searching for a bull position, for a long position, for buying position. And I think we have something which is really handy, it's really useful for us. This is the latest low we have seen here in the market. This is the previous low here, and the high in between is giving us an indication. It's not a proof, it's not an evidence that the market definitely will skyrocket after going through this level, but we have a good indication that when going through this level, chances are very high that this down movement here, shaky to the downside, is over, and we will have the best opportunity to enter a long position here. So what we do in this case is entering along when overshooting the 21st of July bar. You can see this here. This is a daily range when we are overshooting that, which is roughly at 384.77. It's not exactly, but please check it out by yourself. But when overshooting this level, this is indicating us, okay, we are now for the next bull trend and aiming for higher levels. And the minimum target for situation for that is that if this is a first start to the upside, and this really is the lowest point of the corrective pattern, then we can expect that we will see something like a 101, which is a 100% situation, which would guide the market to 443 roughly. And even if reaching that level, we can expect maybe there's more to come because we are in a strong bull market, an overall market here. So this is not necessarily the limit, but this is something we most of the time take as a minimum target, and we are profit takers, to be honest. Most of the time we place a limit order here to sell the long position here in this case. But I think we have a good opportunity that the market is overshooting this as well. So if you don't want to have a trailing stop, if you don't want to stick too long into one position, you can take your profits here. Otherwise, you can of course say, okay, I'm not taking profits here at this level. I will just use any kind of a trailing stop, which could be something like a super trend. Maybe in this case it's a little bit too tight. You can see it is suitable for this market here. If we have more or less the same here, this should work. But if you're targeting some higher levels as well, maybe you should switch to a higher time frame. For example, you can see super trend maybe in a weekly base, or parabolic maybe in a weekly base, which may be a little bit more useful if you want to trade the bigger picture than I am describing here in this case. And what is a good stop level for that? Yeah, well, this first gaining market, this first impulsive movement here should have something like a corrective pattern into an area between 38.2 and 61.8. It's not an exact number, an exact area or line. It is more like a big area here within these box. This is a typical setback, and we are in already. So we are right hand side of this, so the setback was not too fast. It was really in a corrective manner, and it is far enough to the downside. So I think this is absolutely valid for a corrective pattern referring on this bull market here. So I think we have all the situation we need to have a bull market. So for us is this currently the start of the bull market if this level is broken. So if this is the case, our stop can be placed below this lowest point here. Let me give you a bigger screen here. So our stop can be below this lowest point here, but we normally adjust it a little bit to our favor, a little bit to the upside, using this 78.6% level here. So our stop for this situation, or for this long position, would be the 78.6 level, roughly 370, because when the market is directly coming here, we can expect that the market needs a breather here as well, as long as the market is continuing, nobody's hurt, only if the market is going through this level. But if breaking this level, by probability, it's really, really typical that the market is also going through this one. So we can save this amount of money, because when breaking this level, chances are nearly the same that we will break this level as well. So this is just by probability and our own experience in the markets, but this is our level here for a stop. and I think a good opportunity to buy this market. This is the first I wanted to introduce you, Lockheed Martin. I think it's really worth having a look at it. I would expect that the market needs to push through this level here. If you are a short-term trader, you can easily switch to a lower time frame as well, just to check it out. Compare this here. This is the daily chart. Strong move to the upside. You remember 1, 2, 3, 4, 5, and after this shaky to the downside. And now we are switching to the 15-minute chart. What you see here is exactly what you can see here. And let's have a closer look. This is exactly the same pattern. 1, 2, 3, 4, 5, and shaky to the downside. So if you really dare to trade the market on a lower time frame, you can think of trading the same situation here, expecting that the market will continue. But please keep in mind on these lower time frames, there is still a chance of a gap between the days. This is an overnight gap, and this is sometimes hurting very well. So we don't use this trading situation here for our own opportunities. We just see that the market is exactly preparing the same thing here on a lower time frame like we see here on a higher time frame, which I think is really interesting. And maybe you can find a better entry if you want to be a little bit more aggressive. You can enter the position here, but I recommend, due to the overnight gaps, that you keep the stop not too close, because tight stops mean high up trading positions, so the risk out of these overnight gaps is a little bit higher than usual. I just switch to the next one, Magelan Midstream Partners. We can take it really short because it's really easy to say. The last strong movement here, it's not the first wave, but we can see the strong move was to the downside. This one was to the upside. Logically, it would be a short breaking through this level, but I would not be here if I would tell you about this entry stop here. It's just to give you an idea what we are looking at. But we have this on a lower time frame here as well. You can see it's roughly the same, but in the other direction. We had a strong move to the downside here. We had something like an ABC pattern here to the upside, and to not waste your time and give the others also an opportunity to introduce their own trading ideas, I just make all the drawings. You can follow this, or you can maybe see this in the after the show. You can see this again and again to read the levels. This is the same here, 100% target here. It can be a little bit less, of course, but you could expect that this roughly reaches this level as soon as we are breaking through this here. It's the lowest point between the highs here. And our stop initially is above here. No, not above here. It's the 78.6% level. So this is our stop level for this idea. It's not 100% sure. It can, of course, be something like this before plunging here. And this would stop us out. Yes, indeed. But the risk-reward ratio is really giving here, or forgiving here, because if you have sometimes a loss in this size and sometimes profits in this size, even if you have a 50-50 chance, and your chance should be a little bit better than this as well, you should be out of the danger here, and everything should be useful. So I don't want to keep all the others, so I'm switching to the next one, which might be Martin. Are you prepared?
Yes, of course.
Maybe surprised because of the rush end, but
no,
can you grab the screen by yourself, or do I have to hand it over, or Gilbert can do this maybe?
I think Gilbert has to do it. I'm not able to grab it myself today.
Okay, just give me a second. Make the center. Yes.
Okay, great. So I'm going to give a chance here to two quickies now, so that Mike also has the chance to present his markets. I do not need a lot of time for my two trading ideas today. I'm going to share my screen so that you can all see what we are talking about. The first one, of course, is Tesla. Well, we had two bad news in the last week concerning Tesla. The first one was there's a big battery in Australia that's burning down at the moment. It's burning for 4 days now, but as they told the media today, fire seems to be under control since today. So the problem with these big batteries is that you cannot use water to kill the flames, and so they had to think of different ways to get rid of these flames. But I think they're going to manage it right now. but actually this big battery factory was not directly linked to the Tesla cars, so it's not car batteries. It was a different project that was there for renewable energies for Australia. So yeah, I think that's not really bad for the price of the stock, and we see there's no really reaction that could be linked to this kind of news. And the second one was Tesla is going to pay, I think it was $625 to each customer that was yeah, hit by this battery throttle. They made an update, a software update, and afterwards batteries needed more time to load up, and even the capacity was a little bit smaller than before. So they're going to give $620 to each customer who's yeah, who has these problems. So that's the two bad news from Tesla during the last week. But as we can see on the chart, if I get the chart here, let's see. Okay, so it does not really hurt the stock at the moment. So the longer term picture is that revenues from Tesla are rising on a yearly basis, and over the last 2 quarters also on the quarterly basis. We see we had a huge profit here, the first time more than 1 billion of earnings with Tesla for in 1 quarter. So this was a record quarter, the last quarter. We see it here, was good earnings, beat quite solid. And so Tesla is becoming more and more profitable. But I think that's not the deal. If you take a look at the stock, if you take a look at the PE, that's not the deal that they are profitable. You can see it. The market performance is quite good over the last 7 days. We had a big outperformance of the US market, and over the last year we also had a big outperformance. But as we take a look at the chart in a few seconds, you can see that the stock underperformed during this year. So starting in January, the stock quite underperformed the broader market. I guess this is something that's quite normal because it rallied into the addition into the S&P 500. So Tesla stock was added to the S&P 500 lately. The stock rallied into the addition, and afterwards, when the addition was completed, was giving back a lot of its gains. But that's what we see very, very often with stocks that are going to be added to big indices. And so this is nothing new, actually. But what you can see here, price to earnings is more than 300 times. And I think it's not the correct way to look at Tesla if you take a look at the fair value. So Tesla is, yeah, a growth stock. People are playing a bright future for Tesla. And I guess that's what Cathie Wood meant when she said last week that Tesla is going to be something like Apple, so taking a big share out of the EV market, and it's going to grow very fast and to keep its yeah, kind of first position in the EV market. So that's, I think you need a little different approach to look at the Tesla stock. Well, where's my chart? Well, I don't find my chart at the moment. Here it is. Okay. So let's take a look at the Tesla stock. It's down here. That's the Tesla stock. So first thing you can see from the beginning of the year, Tesla was really underperforming the S&P 500 here, but we're at a very important price level at the moment. And if we take a look at the more wide history, we see from the end of the Corona crash, Tesla was really, yeah, I don't know how to say it. It was kind of exploding. So it's quite normal that we see something like retracement here, the pullback, and now the situation is as follows. This is the weekly chart. We see the market was reconquering the 10-week moving average, and testing it once, twice, and now moving up quite strongly. At the moment, pre-market, the stock is around 700 US. So we still have a rising stock for today. And the important level for new trades is this $700 level. So if the stock manages to move with a kind of good volume above this $700 level, we have a good chance to reach maybe 850 again, somewhere up here, $850. If you want to work with a stop loss, you could use a stop loss maybe a tick below $600, and you still have a good risk-reward ratio here. If you enter the stock, let's see here at this level. Oh no, that's not what I wanted to show. So if you enter the stock at this level around $700 and you use this kind of stop, you see this is risk-reward 1-to-1. And if it reaches the $850 level, you can earn 1.5 times your risk. So I guess this is quite a nice setup for Tesla here at the moment. The second stock I want to take a look at is, let's see, Gazprom. Russian gas company. Not too good over the last 3 years. As we can see here, the revenues have been coming down, but lately, over the last few quarters, revenues coming up again. Big profitability here again in the last 2 quarters. So the overall situation of the company is getting better and better, and now we have 2 very important facts that we have to look at. The first is, if you take a look at the market performance, even though the stock was not performing too good, it still outperforms the overall Russian market. Gazprom is a Russian company. It is traded in the US. The ticker is OGZPY. It has quite good volume, so it's really okay to trade it. And what's very, very, very important for this stock is actually the price of natural gas. And if we take a look at the natural gas weekly chart, see the last movement up here, we are at 4.0 at the moment. We were coming down from 150, around 150 here. So prices really moved up quite strongly lastly. And Gazprom is going to profit from these higher gas prices. And as far as I see the market, as far as I'm concerned when looking at the commercial positions, for example, I'm going to load the indicator here for the commissions, for the commercial index. This is the 3 years commercial index. We see it's moving up quite nicely. So what we see here is, with rising prices in the natural gas market, commercials are still building up their long positions. That's very, very unusual, and normally this only happens if we're on the way to see bigger up moves in the market here. So I'm expecting quite big up moves in the natural gas prices, maybe reaching the 5.0 level up here. And the stock I want to trade for this movement is the Gazprom stock. So let's see, we don't need this one here. So that's the stock price here on the weekly chart. We see the stock came down from 380 up to 780 at the moment. I think pre-market it's already 790, so it's going to break out above this high today. And I like this level because if you take a look at the long-term chart, at the monthly chart here, see stock has been around $16 in 2011. So I think this is something the stock could reach again. The area here between $13 and $16, this would be my long-term price target for Gazprom. And it's not only the gas price, it's also the new gas pipeline going from Russia directly to Europe, Nord Stream 2. There is a solution now for the big problems the Europeans had with the US. And so this is going to be completely built as well, and this is also something that Gazprom is going to profit from very, very likely. So I really like this stock long term. Buy it around here. You have to be careful because this is something like a resistance level here on the monthly chart. Could take some time to move above it, but the fundamentals are so good at the moment that I would be willing to buy the stock. Around this price, we have it right here with the target to move up $13 to $16, $17 price target. Okay, that's it for today from my side. I'm going to switch to Mike so that he has a chance to show the stocks here on the screener for today.
Great. Yeah, just hand over the monitor to me and I can show some of my own impressions for my current daily trading ideas. Tesla is so fantastic. I love it. I'm still in, and at the moment I'm thinking about to buy a few more stocks because of the pattern over here is very interesting, Martin. What you said is really fantastic, and I think Tesla will have a quite bright future. And when you see my first buy point over here, it was in last November. Great deal over here with this up gap, the high volume in the breakout. This is so fantastic, and the reactions to the numbers, the last numbers of Tesla, were quite great. So I'm absolute with you. It's a great deal at the moment, and the prices can go much higher. You were talking about, thank you for this, Martin, and today I will talk about Site and ANET. It's maybe for the one or the other trader quite boring, but for me these trades are earning trades, and you see here the earnings for ANET are coming today after the market close. So I wouldn't trade the stock today, but what you see here is a quite great opportunity for probably surprising reaction of the earnings call. We could see this these days. Some stocks had a quite bad reaction to the earnings with a strong pullback move into very interesting levels over here. You might see one, for example, with the Amazon stock. You see this one. Do you see my big trend is this one over here? And you see the reaction of the stock after the earnings, a great, huge gap, and a great regression for the weekly trend, and maybe that might be a good chance to enter the market. And this is exact the same what I have in mind. For example, for the ANET, we are in a quite good position. The pre-earnings, not the pre-earnings, the pre-earning trade for the current earnings are quite good at the moment. The market might expect good earnings, but when the stock will not, or the company will not deliver what the markets want to see, they are maybe under pressure, and you should have in mind where you can collect the one or other stock over here from the ANET, and the one of the first good levels, for example, is here round about the 370. You see here this gap, and you could see this gap has a quite good trading volume, not too high, not too low. It's absolutely okay. So the first level, the first stop level might be here round about the 370, or if we get quite a strong impact from to the downside, we will probably see the chance to get some stocks here round about the 360. This is quite interesting. Just have a look what the numbers will bring, and the potential for the stocks are not the worst thing, because we have really strong trends. ANET is a network supplier, and you just might know for the futures. Networks are very important for our economy and for the privates and for the schools and universities and so on. And ANET as a supporter could profit from the development in the future. So this is the first one. The second one is Site. Site, you see here just a chart. It's not really sexy what I see here. It's a range, but one thing is for me very important to see. Just have a look into this big trend over here. When you see the long-term trend, you see here from 19, or even when you see from 2020, it's a strong uptrend, and we are in a range between round about 180 on the upside and round about 160 at the downside, and this is the range. And we will see the numbers in 2 days, 4th of August, BMO, before market opening, and it's at the moment quite interesting to see the position of the price in these charts. Then you see here a contraction below this resistance level, and it's a difference at the moment, at least, because this first test over here was followed by a down move, the second one too, but what you see is the contractions are getting lower. And when we probably have here the last contraction, and you see here the volume is it's quite low at the moment, and this is in most cases a good situation for a chart like this, and maybe we will see a breakout. If not, you have a range, you can still trade the range, and you see here the support level is round about 160, or maybe here a bit higher, 162, round about in this area. But when we will see a breakout over the upper level, this is fantastic. This could be a great chance, and the next target over here, I think it's the all-time high, around about $206 in the side. That's from my side, and for the first time, it's the last time for me here in the show. I have a few more projects in September, and I have sadly not the time because I'm a trader, and I would like to spend my time in the markets in the afternoon in USA. But for me, it was an honor to be here in the team with Gilbert, Rudi and Martin, and I hope you enjoyed this show, and maybe when I find the time I will be a special guest in the show for the future. So from my side, thank you for being here and for listening to me, and guys, it was a great show for me. I had a lot of fun, and I'm quite sure you will do your best for the future. Thank you.
Yes, Mike, many thanks for all your analysis you did for us. It was always a pleasure to work with you. And I mean, if we see the possibility to invite you again, if you have time for us to jump in and make some further analysis for our show, you are welcome anytime. And we're looking forward to see you here again once in the future.
Yeah, I'm sure I will be there. Thank you.
Yeah. Okay, yes, I mean, great analysis today from you guys. Many thanks for that. I would say we are done for today's analysis show. Again, we will see us in a very short time again. Next week on Monday, we will analyze some more stock picks. And many thanks to the audience for visiting us. Many thanks to Rudi, Martin and Mike. And see you soon. Let's see us at the next show. See you.
Take care.
Bye.
See you next Monday.
Bye-bye.
Goodbye.